Alright, for this video I want to go over the IRS Form 6251 for the alternative minimum tax computation for individuals, and specifically we want to look at a particular type of adjustment for private activity bond interest that is exempt from your regular federal income tax calculation, but it has to be accounted for when you compute AMT. So I've got a sample 6251 here, which is part of a larger return. So we'll look at all the relevant forms and schedules that are necessary. And then I do have one slide here covering some background on AMT and the private activity bond issue. So again, 6251, this is used to compute your alternative minimum tax. Most taxpayers, again, are not subject to this. It really just comes down to what kind of unique items of income or expenses you might have that are added back or deducted when computing your AMT. So there are a number of transactions that could create this AMT exposure, and one such adjustment is for private activity bond interest income. So what are private activity bonds? What are the qualified private activity bonds that create this adjustment? Well, generally, when we have bonds that are issued by state and local governments, the interest income is tax exempt. So under Section 103 of the Internal Revenue Code, you don't have to include in your federal taxable income interest income from state and local government bonds, right? That's municipal bond interest, not subject to taxes. Private activity bonds are bonds that are not issued by governments, let's say, but the primary purpose of the bond is to benefit a private entity. So it's a non-governmental entity that's reaping the benefits of this. If that's the case, then interest income is going to be taxable to the recipient. So if you invest in, let's say, a corporate bond, that'd be a private activity bond. The interest income is going to be taxable to you. The qualified private activity bond interest is kind of a hybrid here. So state and local governments can issue bonds that are tax exempt. So the interest paid to the recipient is going to be tax exempt for federal income tax purposes. But the principal purpose of the bond is to finance projects that benefit those private entities. And so there's a list of what constitutes a qualified private activity. And so if they meet all of these elements, the municipal bond interest, even though it's for private activities, is still exempt from federal income tax. Now here's the catch. The interest income, although it might be from a qualified private activity and it's exempt from federal income tax, it is not exempt from alternative minimum tax. And so this is where the adjustment has to occur. So if we look at our fact pattern here, and then we'll take a look at the return. Let's say we have John Smith, and John's got a very large portfolio of investments. So stocks, bonds, corporate bonds, municipal bonds, but he's heavily weighted in municipal bond investments, most of which is private activity. So during 2022, he received tax-exempt interest income from those municipal bond investments of $85,007. And then of that, $75,319 is private activity bond interest income. So if we look at the 1099 John received here from the broker, he's got his taxable interest income up there in box 1, right? That's not unusual. That's just taxable at his regular federal income tax rates. But down here in boxes 8 and 9, the amount of tax-exempt interest from municipal bond investments, $85,007, and then the portion of line 8, that is private activity bond interest, is reported in box 9, and that's $75,319. All right. Now, all of this interest income here, the $85,000, is going to be exempt from federal income taxes, including the private activity bond stuff. However, the private activity bond interest is going to be this AMT adjustment. So if we look at John's tax return here, let me jump up to Schedule B. So Schedule B, where we report the interest and dividend income, we can see here on line 1, he's reported that taxable interest income from the box 1 of the 1099 INT. And then on page 1 of his 1040, line 2A, tax-exempt interest, there's the full amount of the interest, the $85,007. And notice it's not being included in taxable interest, right? So everything is exempt from federal income tax purposes, regular federal income tax purposes. But what do we do with the private activity bond adjustment? So this is where we have to make a change on the 6251. So 6251, line 2G is where we report that interest from specified private activity bonds, right? So there's the $75,319 that's being added back. So in part 1, we start with his federal taxable income. So that's at the bottom of page 1 of his 1040. Add back the standard deduction, add back the private activity bond interest, and we get his alternative minimum taxable income, which has now been adjusted to $530,371. Now, John's a single filing taxpayer, so he does get this exemption here because his income is below the $539,900 for 2022. So the net amount here that he's working with, as far as calculating his AMT, is $454,471. Now, line 7, this computation can be quite simple if you don't have any qualified dividends or long-term capital gains that are subject to those reduced rates. Right? You can just simply use the last paragraph here to compute what the AMT liability is. But if you do have qualified dividend income, capital gains, then you have to use the worksheet in part 3. So part 3, I won't go into this in too much detail, but this worksheet works very similar to the qualified dividends and capital gains tax worksheet that you would use for regular federal income tax purposes. So on John's regular federal income tax computation, he used the qualified dividends and capital gains tax worksheet to figure out that, okay, his total liability for regular federal income tax is $108,995, right? And so that's why we see the $108,995 reported here on line 10, right? Now, the $110,459, this is the AMT that he calculates in part 3. And again, I won't go through all of it in detail, but again, the exercise here, if you go through the line items and follow the instructions carefully, what you'll find is that you're calculating the tax in a similar fashion to what you do, again, on that worksheet, that qualified dividends and capital gains tax worksheet. So at the end of the day, bottom line number here that John has is the $110,459. So that is the minimum tax that John has to pay for the year, given all of his income. And so what you find on this 6251 in part 2, we have the minimum tax, right? The tentative minimum tax that John owes, $110,459. We have the amount that's being computed for regular federal income tax purposes, the $108,995. So he has to make an AMT addition for $1,464. So not a large adjustment, but nevertheless, it's still required, right? And so if we look at page 2 of John's 1040, we can see there's the $108,995 that he computed on his taxable income here for regular federal income tax purposes. Again, that was using the qualified dividends and capital gains worksheet. And then he has an addition there for the AMT. So Schedule 2, Line 3 is where we have that $1,464, that AMT amount. And so the adjusted tax liability that John has for the year is the $110,459 before accounting for the NIT and things like that. But yeah, the main point here is that, okay, if you do have items that need to adjust your AMT, you could have an additional element here that needs to be added to your tax liability. And so that's what we're seeing on the 6251 is this $75,000 in private activity bond interest certainly increases AMT income substantially. And so that's what eventually led to him having a tack on an additional $1,400 there in taxes. All right, so that covers it. I hope this was helpful. I've got some other videos on AMT issues. I'll put those links to them below in the description. And as always, if you have any questions, feel free to leave me a comment below. I try to get to as many of those as I can. And I look forward to seeing you again on the next video. Thanks.